It's really not that hard. You just have to get creative in today's day and age to become a landlord.
Hey guys, Sean Bloomquist, Pine Financial Group. We work together so you succeed. If you're watching us on Facebook or YouTube, please like the channel, subscribe, hit the notification bell so you're getting all the up-to-date content. I've got my good friend Scott Kraft here with me today. We're going to talk about 3 easiest ways to become a landlord. I know you've got plenty of rental properties. What's the first easiest way for someone if they want to become a landlord and get in this industry?
Yeah, I mean, it's tough and it's getting harder, right? Because interest rates are going up, property values have skyrocketed over the last decade. They're not really coming down, right? So you got to get creative. So I think that probably the easiest way right now to become a landlord is house hacking, right? And this can take many different forms. This could be as simple as, you buy your first 2-bedroom condo and you rent out one of the bedrooms, right? Well, guess what? If you've got one of those bedrooms rented to a roommate, you're a landlord, right? So that's landlording. But it can also be way more than that. So one house hacking opportunity that I think is fabulous right now is you could buy up to a 4-unit building and still get owner occupied financing for it. An FHA 3.5% down mortgage on a 4-unit building, so long as you live in at least one of those units. So picture this. You've got a 4-unit building with, 2 upper level units and 2 lower level units. You pick one of those to live in, you rent out the other 3. More than likely, those other 3 units are going to pay your mortgage. So, you might even be positively cash flowing as of day one.
And you're living in it.
Right. You're living in it. So you get owner occupied financing. You have to live there for up to a year. And then after that year is up, you can go somewhere else and potentially do it again.
So you can just rinse and repeat and go buy another 4-plex, potentially.
Exactly. And that's what I like to call the number 2 easiest way to become a landlord. That's called nomading. Right? Where you buy one property, live in it for a year, and then after your year is up, you can go ahead and turn it into a rental property. You're not violating the terms of your loan so long as you live there for at least a year. And the benefit to these is you're getting owner-occupied financing, right? So what that means is if you're going to live in the property, the lender is going to give you better terms than if this was just a pure rental property, right? So oftentimes on a rental property, you're expecting 20-25% down, probably a higher interest rate. Like I said, you could buy up to a 4-unit with a 3.5% down FHA-backed mortgage with a lower interest rate.
Nice.
So
I mean, that's crazy. It's crazy powerful how easy that can be.
Exactly. Yeah. So that's number 2.
Okay. So number 3, I'm assuming is going to be the one that we deal with quite a bit in our industry.
Yes. So a lot of people do this. It's called Brrrr Investing. That's buy, rehab, rent, refinance, repeat. Okay. So the idea here is you buy a property that needs some work, ideally using a hard money loan from someone like Pine Financial, because we'll not only finance the purchase, but we'll also finance the rehabilitation aspect of it. So you buy the house, you fix it up, you make it nicer. That will increase the value of the property. And that spread between what you borrow from a lender and the value in the property when you're done fixing it up, that's called your equity. And then when you go down to another lender to refinance us out for a 30-year fixed rate mortgage, that equity is now your down payment. So it's a great way to pick up a rental property without necessarily having to have all this cash available to you for a 25-30% down mortgage.
And you're getting a lower loan to begin with because you've already built that equity into it. So you should be able to cash flow much easier on that property.
Exactly. And the greatest thing about these 3 options is they're not mutually exclusive. And you could basically do all 3 of these strategies, intertwined with each other. You could buy your 4-unit, fix it up, then refinance it, right? So it's really not that hard. You just have to get creative in today's day and age to become a landlord, but it is possible.
Just understand those 3 different strategies and their nuances, and then just start implementing them depending on how that project shakes out. One might work better for this or one might work better for this, and then just run with it. I mean, they're like you said, they're about as easy as it is for an entry barrier to get into this industry.
Absolutely.
Do you have any other thoughts on this that you want to put out, or?
Biggest thing I would say is just, get creative, look at what's out there for sale, talk to a lender, see what kind of terms they can offer you on an owner occupied loan, and, just see how you could picture this working for you. And if you're willing to move every couple of years, I mean, these are great ways to pick up rental properties that I've done in my own life.
Right on.
Yeah.
Yeah, that's great. And if you've got any questions on that Brrrr strategy you talked about or anything else, don't be afraid to reach out to us at pinefinancialgroup.com.